Okay, that's an update on the numbers today. Shubham Agarwal is also joining us this afternoon. Shubham, let me get your call on the markets first. What kind of levels have we cracked today given the kind of downside we're seeing?
Right. If you look at the medium-term setup of Nifty, then we have been recommending that the channel that is developed on the medium-term chart is actually a bullish sign if we talk about something like a 2-3 months perspective. And we believe that any correction on the market should be temporary in nature, and we'll see the Nifty moving toward the level of 6200 and 6250. So I think that after the formation of a short-term negative pattern that was there 2 days back, that we saw doji getting formed on the daily chart, which has reacted negatively, and post the fact that some negative news have already emerged. I believe that this should be a temporary pullback, and the Nifty might even come down to 5900 or 5850 kind of a band. But I would use that band as a good buying opportunity. So maybe another correction of 50-60 points from the current level, and beyond that should be used as a good buying opportunity. The important support for Nifty is placed around the level of 5800, so that is the level which we don't expect Nifty to breach. And on the upside, we can look for the target closer to 6200 and 6250. So our stance continues to remain bullish, and we feel that this correction is very much temporary in nature.
All right, I believe the finance minister is speaking on the markets again. Let's just see what he's saying.
And sowed the seeds for a high current account deficit. In 2012, we acknowledged that these were problems, and in my first statement on the 6th of August, I said these problems will be addressed. On fiscal deficit, I said that I will not allow the fiscal deficit to go to what was feared at that time, 6% and above. I said I will contain the fiscal deficit to below 5.3 as recommended by the Kelkar Committee, and I will try to do better. In several financial centers of the world, in which some of you, or maybe many of you, were present, Hong Kong, Singapore, Frankfurt, London, New York, Dubai, I said these are red lines. These red lines will not be breached. I will contain the fiscal deficit. At the end of the year, we showed that we can do what we promise. We reported a fiscal deficit of 5.2 when I presented the budget, but as it turned out, the fiscal deficit is only 4.9. We also said we will take measures to contain inflation. Headline inflation was hovering around 9%. We have contained it. In about 9 months, we have brought it down to below 5%. It's now moved up a little from 4.7 to 4.86. So on fiscal deficit, on inflation, we have delivered despite difficult circumstances. The Eurozone crisis hasn't helped at all. Just as we thought that the world will recover, just as all the pundits said that the world will recover, the Eurozone crisis has made matters worse. And only 5 days ago, the World Economic Outlook once again downgraded world economic growth to 3.1%. We have to live in the real world. Yet we delivered on fiscal deficit, we delivered on inflation. For this year, we have set a fiscal deficit target of 4.8. And I assure you that that is a red line that will not be breached. We will remain within 4.8% of GDP. On inflation, the steps that we have taken and the steps that we will take, especially on the supply side, will moderate inflation. But I can't promise you zero inflation. In a developing economy like India, where there's huge domestic demand and there are supply constraints, There will be some inflation, but as the fiscal deficit comes down, as the supply side improves, as we produce more power, as we produce more coal, as we reduce our dependence on some imported commodities, and if, as a big if crude oil prices don't spike up again, I think we can contain inflation to a tolerable level. This leaves, of course, the current account deficit, which seems to be playing in everyone's mind. It seems to be playing in the mind of those, I've not met any one of them in flesh and blood, but those who speculate on the currency in the foreign exchange market. In the last year, we acknowledged where the current account deficit stood. At the end of the year, we not only financed the current account deficit, we added $3.8 billion to our reserves, something which is not noticed. In 2012-13, we financed the current account deficit fully, and we added $3.8 billion. In the previous year, we had run down reserves. But in the last year, we added $3.8 billion. This year, yes, the current account deficit looms large. We are doing our sums, and I'm confident that with some stern measures that we have taken and we will take, we can contain the current account deficit to a level below last year's current account deficit. That is point one. We will contain the current account deficit to a level below last year's current account deficit. And point number two, we will finance it fully, safely, without running down reserves. Now, why do I say this? I say this because I believe the long-term investor, the patient capital, continues to repose faith in India's economy. Things, of course, happen in an unexpected manner. What happened on June 22? What happened on July 11? There are some who can move markets without doing anything, simply by hinting at doing something. But these are consequences that we have to bear. We have to factor these unexpected developments while we formulate our policies, and that's precisely what we are doing. And I'm confident that we will contain the current account deficit to a level below last year's current account deficit, and we will finance it in the current year. Now, I know that you play a very important role in bringing the investments to India. I think there is enough liquidity in the world. There's enough money in the world which is looking for safe investment opportunities. I think India remains an attractive destination for investment. Even if some part of the quantitative easing is withdrawn, there will be enough liquidity to finance India's capital requirements. It is for us to take the right decisions, make the right policy choices, so that people will find there are attractive investment opportunities in India. We are working on that. One of the things we are working on is to relax or remove the FDI caps. But that's not the only thing we are working on. We are working on projects. We are fast-tracking infrastructure projects. We are clearing major proposals for airports, for ports, for roads, for railway lines. We have lined a large number of private sector enterprises whose projects have been stalled. These are being brought to the table, addressed, and, if necessary, brought to the Cabinet Committee on Investment for a decision. You ask the private sector, they will tell you that on each one of the projects, we, And I personally have spent time discussing with the project promoter what the problems are. We've identified the problems. There's a group whose only task is to address those problems. And if the problem still is intractable, it will be brought to the CCI for clearance. So private sector projects will also move. We have the IDFs, which have started financing projects. There are people who have expressed interest in the IDFs, and I'm sure money will flow into India through the IDFs also. But your role is slightly different. You are risk takers. You are looking for innovative projects. You're looking for that guy, man or woman, who has that spark, who has that intuition, who has that idea which can germinate into a good project. All venture capital is about venturing into the unknown. It's a bit of adventure. You are there because you like adventure. There are enough entrepreneurs who like adventure. And in the budget, I did make a couple of announcements that will promote venture capital. We announced something for angel investors. We announced something for alternative investment funds. We have made the venture capital a pass-through. And if there are any more issues that deserve to be addressed, that need to be addressed, we are ready to listen to them and address them when the time comes. But what is important is that you should not look at only established business houses and their projects. For that, there are many other investors. There are investment banks, there are pension funds, there are insurance funds. I think your role should be slightly differentiated. We need to grow not only our infrastructure sector, we need to grow our manufacturing sector. No country can become a major economy without having a manufacturing base. In fact, in the United States, I found to my great and pleasant surprise that they are rediscovering the virtues of manufacturing and are placing emphasis on becoming a manufacturing power once again. They want to revive their automobile industry. They want to revive their electronics industry, space that had yielded to other countries some years ago. I'm happy about it, but that's the right way to go about it. If that is good for the United States, it is good for India in greater measure. We have to become a manufacturing country. How can we afford to import what 1.3 billion people will require in terms of manufactured goods? If the Tatas can make steel in the UK, let's say some kind of a special steel, why can't they make that special steel in India? Basic goods, why can't we manufacture it in India? Therefore, while in the past few months my colleagues and I have emphasized the role of infrastructure, I want to emphasize the role of manufacturing. We need new products, we need new designs, we need new ideas. We need new uses for products with a bit of redesigning and re-engineering. And I would therefore urge you, private equity and venture capitalists, to set for yourself the target of identifying 500 new and upcoming ventures in the manufacturing sector and try to fund them. Some of them will fail, but many of them, if the idea is basically a good idea, will succeed. What they are starved of is capital, and if capital is provided to them, I'm sure they will succeed. The second that I would like you to do is not only finance these entrepreneurs, but mentor them. Mentor them on what good financial practices are, what good corporate governance is, why good labor relations promotes productivity, and why ethical behavior is the best policy in the long run. I think we should not only finance such entrepreneurs, but mentor them and help them become good citizens and good entrepreneurs. And the third point that I would like to make, especially to India-grown fund managers, is this. I can understand foreign funds and their managers looking to India, like they look to every other market, as an opportunity to make profit. That's perfectly legitimate. But an Indian fund, Indian promoters, Indian managers, I think they should look for more than profit. Yes, profit must be a motive. Without profit, we haven't found anything better than profit to drive into enterprise. There's nothing wrong with profit. But along with profit, I think you must have a certain sense of pride in building the country. This is our country. If we don't believe in the future of this country, who will? If we don't build this country, who will? If we don't have faith that we can resolve our problems and become a middle-income country and then become a high-income country.
Saying words, if we don't build the country, who will? That's the finance minister talking. Very important point that he's made is that he's promised that this year's current account deficit will be less than last year. How will they manage that? We don't know, but that's a promise that he just made. Quick break. We are coming back on the other side. Some last-minute equity calls on this very weak Tuesday and the promised first look at the BlackBerry Q5. Back in a moment.
Countdown, presented by BSC, Investors Protection Fund. Investors Protection Fund.
Welcome back. Now, as promised, we're getting you a look at BlackBerry's latest device. We're talking about the Q5. Anant Dwivedi is joining us in our studio to take us through the spanky new gadget. But Anant, how is this one different from the other recent launch, which was
the Q10?
Yeah, how is it different?
Essentially, it's pretty much the same in terms of looks, but it's a stripped-down version. So they've got the physical keypad out here, same 3.1-inch screen, but you know they've reduced the price by removing some of the essential, those frills out there. The 3.1-inch screen is an LCD vis-a-vis an AMOLED in the Q10. It has a 5-megapixel camera. The Q10 has an 8-megapixel camera. This has only 8 GB of memory. That has 16 GB of memory. So all these things, they've stripped down some of the features. But what's good is that the processor and the RAM is the same. So there's no performance lag on this device.
But you know, even the Q10 wasn't enough to get people excited about BlackBerry, and people have been switching left, right, and center.
We know about the switch. We know about has switched to Apple.
So BlackBerry's market share as an operating system is under 3%, and that's still dwindling further down. This is like a yes and a no. This can save it and maybe not. The reason being that both the Q10 and the Z10 are above the 40,000 rupee mark, and people were looking for an affordable option. This is it.
So affordability is now 24,000 in the mobile phone market. Wow.
So the entry level for the BlackBerry 10 operating system is 25,000 rupees, and that's as cheap as it gets. Now, if you look at some of the other options in the market, you're getting quad-core devices, 8-megapixel cameras, full HD touch screens for 27,000 rupees, something like the Galaxy S3. So it's going to be very difficult.
Is this a home run, or is this far off from that mark?
It's far off. It's far off from a home run. It will be interesting to see how BlackBerry loyalists respond to this, because BlackBerry loyalists, whether they like it or not, they've been forced to go touchscreen.
They should just relaunch the BlackBerry Bold 3. That's what they should do.
Yes, because they've got rid of the physical keypad buttons out there, so it's a big problem. Loyalists are actually struggling. I know, like you're struggling with the touchscreen. So, I mean, if you get a little used to, yeah, fair enough. You can latch onto the BB10.
Thank you, Anand.
All right, just a couple of minutes left to go to close. Shubham, just to turn back to the markets for a moment. Just leave us with, your strategy, particularly when it will come to the banking pack. You've seen how the BankX has reacted today, down 4%. Chidambaram coming out with some amount of reassuring comments. Nothing really new to take away there, but trying to stabilize the markets. What are you anticipating with the days to come?
Yeah, on the bank index, if you look at the bank nifty setup, then it is clearly, it has broken down from the immediate consolidation that was there. And we expect the bank nifty to settle down somewhere around 10,900 to 11,000. So what we feel is that the private bank still has a lucrative setup when we talk about medium term. But yes, on a shorter term, the pain might continue for some, another 4-5%. So after we see a 4 to 5% correction in stocks like Axis Bank or a stock like ICICI Bank, I would again take a bet on the long side, hoping that the mean reverting band that is there in most of the stocks will see an up move again. So PSUs, yes, definitely I'll be out of that space because there is no sign on the chart which can suggest us whether there is a bottom on that. Even the mid-cap banking space, stocks like Allahabad Bank has broken down today, and I feel that another 15 to 20% correction could be, very short-term impact on that stock there. So most of the mid-cap and PSU names are placed negative, but still I would take a bet on the long side when it comes to private bank in a temporary correction.
Okay, Shubham, a little short on time today. Thanks so much for joining in and giving us your market perspective as we are getting down to closing this.